Broadcast. Today is Friday, May 3rd. Welcome to the Zaner Marketcast, your one and only spot to keep up with all of the agricultural market news. I am Zaner Ag Head Joe.
And I'm Dan Hussey.
Today we are going to cover some ground. Satellites, sustainable airline fuel.
A little bit of ground beef testing and bird flu, and
we got it all.
Bring it home with a little bit of a market recap.
In this podcast, this is your one-stop shop for everything ag related today, because we're going to cover some ground. We were just talking a moment ago as we were gathering all of the equipment and things to get started about a game. And one of the questions in the game was, how much money would it cost for you to yourself in the foot with a BB? And everybody was thinking about a value of what it would take to put that BB into your own foot, sort of self-inflicted style. And I was reminded, I was triggered mercilessly about an episode I had when I was a young child, and a gentleman, can I say shot on the podcast? Shot me in the forehead with a Crossman air rifle with a BB in it. And the BB lodged in my forehead, and it took a number of days for anybody to realize that after all the blood had come out and all the tears, my 10-year-old self, maybe 9-year-old self, had to go to the doctor, and sure enough, I still had the BB lodged between my skull and my skin, which probably explains a lot of my personal shortcomings, childhood trauma. And the doctor said, yes, you still have this BB lodged in your forehead. And they took it out, and it shot across the room and hit the wall, and they were able to retrieve it and put it in a little plastic envelope for me, and I had kept it for a number of years. I still don't have it. Under normal circumstances, I would give a shout out. I would give a quick middle finger to the gentleman who me in the forehead, but he has since passed, and so God bless you, Ben Wheeler. I still remember you shooting me in the head with a BB gun, or a BB. And
are we sure this isn't just you reminiscing of watching Christmas Story one year here, Joe?
I mean, God is my witness on all I hold true. Ben Wheeler,
that's too funny.
Got me in the forehead with a Crossman air rifle with a regular BB in it, no pellet. Thank goodness. It might have been a different story, but certainly that explains what's wrong with me.
I had no idea you had so much in common with Dick Cheney and his cohort of friends, man. That is amazing. That's hysterical.
You could see how easy that, you would think you got to cut Dick a break. It's just so easy to go from walking down the street to shooting or to somebody in the head with a BB.
And in his credit, he didn't take out a vital organ or an eye. Sounds like he hit his target.
But I'm not going hunting with him or Ben Wheeler, I guess is the punchline to that story. This week, or today specifically, we came into the day with a bit of data. Jobs number, what was was
175, something in that caliber, right? Expectations for over 200 mark.
2.25
came
maybe
in under expectations. We saw, of course, the market rally on that, which is a little, and when I say market, I mean like the S&P 500, the Dow Jones. We saw risk on in this environment, which is not typical of what you'd think if you had a number of, that reflects a slowdown in
Jobs
the economy,
miss, right?
Sure, but when you consider what the market might be pricing in terms of interest rates, and maybe more importantly, how the Fed is supposedly going to react to this type of number, it makes some sense. Before this number, the jobs release this morning, and also we saw unemployment uptick to 3.9% from 3.8%, another indicator that, maybe things aren't going as they planned. I would say, hey, take that with an air of caution, because the way these numbers are counted, if you have more people, if we're creating less jobs than we maybe thought before, and employment upticks, that still represents people who are looking for jobs in this economy. But it really gets scary when they start to fall off that unemployment number.
And they glossed over that change.
Yeah, absolutely.
3.8 to 3.9?
Yeah, a point one seems small, but it represents hundreds of thousands of people here.
And maybe the beginning of they're going to let these numbers continue to fall.
Mm-hmm.
Revisions this time around, we always talk about the revisions. This time around were a scant 22,000
in March, but the February number, they took it down 125,000 and revised lower. in February. That's a massive reduction 2 months back. And we just glazed over that as well, which I don't think the market necessarily glazed over, because when you look at how the Fed fund futures were pricing what they think the Federal Reserve might do with interest rates. We saw after Wednesday's FOMC report where they left interest rates unchanged. Powell came out and said his deal. After that and into this morning, the market was pricing in the probability of one interest rate cut through the end of this year. After the employment number this morning, they're pricing in 2 interest rate cuts.
And that lets us jump to our question of the week. Did this week's Fed announcement have any effect on rates? And do you think this will change in the near future?
Ooh, that's a loaded gun.
Of course, right? That's a big question. And certainly I think you're starting to see the beginnings of that.
Right. And we don't know how it's going to play out.
But,
sure, you got to walk before you can run, so to speak. In this case, you got to fall down before you hit the floor, I guess, the opposite of that. But right, things happen before we catch on and people start talking about, economic slowdowns and what have you. These numbers are the precursors, right?
And we went from the potential for one cut to Fed funds now
Pricing
not necessarily
in 2.
locking in, but pricing in the potential for 2.
Right. And that is a moving target. In this week alone, we went from not thinking there'd be a cut to now thinking there'd be 2 by Friday. So this changes, and that's how the market, of course, is made. There's 2 sides to every coin, right?
And that was in the Fed chair comments where
Correct.
he said, okay, we have given some guidance, and now we want to reel some of that guidance back and say, we're going to be looking at the data, and the data will tell us what to do, and then we'll tell you what we're going to do after we see the data.
And if you follow the data, the market trying to do the same thing is trying to tell you something as well.
Sure.
And whether or not that sticks, that's the $1 million question.
Let's do the numbers.
Yeah.
Let's do the numbers. Weekly update.
Big week.
Start with corn. For the week, we opened at 450. The high was 468, low 443 3/4. Last trade I saw was 460. That was up 10. I think that's above the 100-day moving average.
It was.
Okay. 100-day moving average came in right around 458. I should have wrote that down. My apologies. Double check on your own time. Up 10, though. Corn, not a bad performance, especially in a market that didn't really seem to want to go along for the ride earlier. They managed to, piece by piece,
really
put a real nice week
and
together.
you pointed out the impressive volume here that we saw through those levels. I mean,
thousands of contracts.
And that's what you would expect, right? When there's something behind it. This isn't just corn rallying, for no reason. When thousands of contracts are pushing through big levels, and we know that there's big positions from certain players like the fund short, we immediately have to start thinking about, right, how that's short covering, so to speak, might or might not. We don't know. We don't know exactly the volume and the position, right, that's taken out.
We'll know later tonight. Right?
Yeah, absolutely.
Yeah, for sure.
But, right, it's our job, to sit here and kind of think about this and apply some logic and reason.
And we've come from a period of relatively, I wouldn't call it subdued, but just okay volume.
In quiet markets.
Spikes from time to time in quiet markets. But to go from that, which was, I think 7,000 was a big number for a while, to go to I think we did 20,000, 21,000 contracts on the open. I mean, those are that speaks to, this is the time of the year where you're seeing some participation and maybe we have some place to go.
And there's a lot that can be said for money flows and cash flows that are driving this, right?
For sure.
Big dollar signs are moving through this and through the markets right now.
Beans opened the week at 11.76. The high there was 12.16.5. Low 11.56 1/4. Last trade I saw was 12.16 1/4 in the January contract. Here again, candidate for chart of the week. Chart of the week. Here is the chart of the week. It's beans, right? Because we're up 39. Maybe there's an argument for meal, but up 39 in July beans. March high in the July bean contract. Just from a quick look at the charts before we ran in here, 12.40. So that's maybe we've got some place to go there. Up 39 today. Certainly all eyes pointing toward next week.
Yeah, and there's some big moving averages above that, like wheat already ran up and had tagged that 200-day. I think anyone who's looking at a technical chart right now is thinking about what are the upside projections for corn and beans, and without giving too much of our analysis and recommendations away, there's some big obvious levels above that if price discovery is going to take hold and we're going to try to find resistance, I don't think you have to look too far to find out that those gaps in the 200-day are pretty much what we're all talking about, right?
Sure,
and there's no hidden agenda there. There's gaps above in the corn and the beans. as well as a 200-day moving average, which, hey, if there's something to think about, maybe those are the levels that the whole market is keeping an eye on.
Wheat, we opened at 615 and a quarter on the week. The high was 632 and a half, low 593 and a half, but we closed the week at 623 and a quarter. That's just a change of up one. So even though wheat price action felt positive, we didn't really travel that much distance, came up off those lows, which was certainly productive, right?
Definitely impressive.
Last week's high in the July contract, just a quick look, I think I saw 633 and a quarter.
And what was our high this week?
632 and a half.
See, now that to me says, personally, that says wheat. I was a little worried that wheat was showing us maybe that the top was in, and the fact that we didn't get that, the market retraced the downside, so to speak, alongside corn and beans coming back up. It impressed me today, right? Like I don't want to get very bullish the wheat here, but because I think there's still some big levels to chew through, but. Wow. Okay.
And last week's bar was pretty big. Right?
Yes.
Last
week, wheat did its work last week, right? We were waiting this week to see if corn and beans would respond, and well, I think we have our answer there.
Yeah, for sure.
The only thing I wanted to add on the meal and the beans there, we typically see a meal-driven rally when it's something, there's a little bit more behind maybe the substance and the meat on the bones of this rally to give it a little bit more, a little more confidence in the near term that we are in fact in a short-term period of price discovery higher. Seeing meal go with the beans today, and both being arguably our pick one for chart of the week, right?
Yep.
That was a pretty impressive thing that we don't always see sometimes in these situations, and can allude to maybe, how lofty or how frosty a market's getting. Anyway.
And truly, meal opened the week at 344. The high was 374.80. Low was 341.50. But we closed the week at 373.20. That's right near the highs. A change of up 28.50 on the week. Candidate battle it out with beans for chart of the week, taking out the high. And this was just a cursory glance. I'd urge everybody else to double check this, but taking out the high from January, which was 374.50. So to me, that what we hear Ted say often is we're looking for the meal deal, right? And that's the meal's moving here. Yeah. And so to me, when you think about it fundamentally, that meal, once they process, and obviously when you look at bean oil supplies being what they are, this meal is kind of moving.
Yeah, and I think meal-driven demand is important, right?
For sure.
Bean oil arguably has a fair number of alternative, competitive agricultural products out there. But when meal is moving and driving the rally, it just feels a little bit more real to me.
And in the previous 2 weeks, the idea that meal maybe wasn't moving as well as we would hope, that sort of weighed on our thinking, and maybe meal really isn't moving as much as it could. And sure enough, here we are up 28.50 on the week. Oil 45.56 open for the week, 45.97 high, low 42.68. Last trade I saw 43.04. That's a change down 250. So the oil market, the lone non-participant in this week's higher prices, but down 250. It is what it is.
Yeah. And I think arguably oil's had other influencing headlines recently that
I would agree.
I'm not going to sit here and speculate on how that's affecting things, but I definitely know that there's been a little bit of disappointment in terms of the clarity we've seen in some subjects, right? So with that being said, it looks like this week we got some news that CNH is trying to compete here, or is competing with John Deere in bringing satellite communications to their equipment in a recent deal that CNH Industries and Intelsat operator, one of the world's largest integrated satellite and terrestrial communication networks, announced a collaboration on Monday that will provide farmers with universal access to internet by way of satellite communication services. So now, if you're a fan of the red equipment, you're going to have the same privilege of getting satellite internet and communications right into your cab, which was something that earlier this year, I think in January, John Deere and Starlink signed an agreement to bring the same service. So green and red now in neck and neck with trying to give the farmer the utmost technological capabilities in that cab. And it's going to be fun to see what other technologies now come alongside that to help support, right, doing your job. If the cab of the combine is now a smart thing, imagine, all of the other uses that can, be attributed to. And certainly getting satellite communication hooked up in all of our agricultural equipment means that it doesn't really matter what kind of cellular service you have anymore. These things are going to be able to operate with an internet connection anywhere in the world.
And for folks who don't necessarily follow satellites, I like to spend as much of my personal time as I can sitting in a fold-out chair, looking up into the night sky. My personal satellite count for the week is only 2. I've only seen 2 satellites flying overhead of my neighborhood. But if you spend a lot of time looking up, you may surprise yourself at how many of these things you see flying through the sky. And if you get onto the internet to see how many satellites are now flying around the globe, you will simply be amazed at the number. And of course, Starlink is usually the name that you hear. Those guys doing a great job shooting them up about 60 at a time.
Yep.
But
and to give Satcom from Intelsat some credit here, they do have 60 years of experience in this industry. So while Starlink may be a new arriver and a disruptor, there are definitely other satellite companies out there that are willing and able to provide service in this industry.
Really making it happen.
Yeah, absolutely. And it's great to see some diversification, right? This is what makes the world go round.
Next story from Reuters. USDA says ground beef tests negative for the H5N1 bird flu virus. U.S. Department of Ag, USDA said on Wednesday that all the ground beef samples sent to the National Veterinary Services Laboratories, the NVSL, for PCR testing were negative for the H5N1 bird flu virus. USDA's Food Safety and Inspection Service, the FSIS, collected 30 samples of ground beef from retail outlets in the states with dairy cattle herds that had tested positive at the time of the sample collection. NVSL reported that all samples tested negative for H5N1. These results reaffirm that the meat supply is safe, the USDA added. The U.S. Food and Drug Administration said preliminary results on tests on additional dairy products show pasteurization inactivates. We were almost going to have a fist fight about this today. Inactivates the bird flu virus, which is just great news. And maybe,
it's a fancy way of saying it doesn't, I don't think, destroys the virus, but certainly does not make it whatever pasteurization does means that milk is not going to get you sick.
Right. Now, in 3 weeks ago, we sat here and said, this is not a big deal. Since then, milk chart has certainly rallied. Quite a move in milk. But so this is saying that meat supply is safe. All indications are milk supply is safe. And I saw I saw Nathan Lane, who is vice president with the National Cattlemen's Beef Association, on RFD TV just a little while ago. And I don't think I can say it, or I don't think we can say it any better than he did. What he said is basically what you've got is a lactating dairy cow issue now, an animal health issue, and it is not a beef supply issue and not a beef consumer issue. And the thought was
great for consumers.
Now we move on to the next thing. Here, this question is asked and answered. Certainly was great to be vigilant and do all the work that they did, but now they're telling you this is just an animal health issue and not a consumer.
Yeah, and I think, the proof is in their data collection there. They tell you they went to the places, cows are turning up positive with this, and they tested thoroughly through that supply chain. It's not like they randomly went to another place where the cows may or may not be sick. They specifically picked out, right, where cows were testing positive
Good point.
And tested down the supply chain.
Absolutely.
That's a good way of, going about that, in my humble, uneducated opinion.
I agree.
Yeah. So Farm Bill announced here today with some new income caps. Generally speaking, I think this was, or seems to be, along the lines of what is already going on. The House and Senate plans for the Farm Bill to go in opposite directions when it comes to eligibility for farm program payments. However, under the House proposal, farmers with income over $900,000 would be eligible for payments of at least 75% of their income is derived from farming, ranching, forestry, etc. This falls more in line with the ad hoc disaster programs that we're currently seeing that were implemented kind of fill the gap before this bill is finished. So it seems to me the House is trying to go after a plan that, in my humble opinion, that mimics what is currently available to try to impact the farm the least. But the language here that the Senate is using, which is meant to discourage further investor purchases, which would restrict for the first time wealthy investors and absentee landlords from benefiting from farm safety net programs intended to support active farmers who are taking the risk in producing crops. In other words, they want to make sure the money's going to the farms that need it and not ghost investors, not outside people involved in farming that are in it for just price and profit.
Growers
they
and
genuinely
producers
want this program to work
with skin in the game.
right.
As opposed to maybe international investors or
Which
even
unfortunately
domestic investors.
opens the door to plenty of
for sure.
You know,
and it's America.
Farming for payment.
If you've got the dough and you want to buy it, I mean, that's kind of the American way, right?
Mm-hmm.
But the idea that we're going to be sending these farm payments designed to help those who are actually growing it to people who are not actually growing it. This seems to be a step in the direction of changing that.
And definitely check into these numbers a little bit more about the adjusted gross income qualification levels. We can't really speak to, how good those are or bad they are for the farm. But it does seem that at least this is going to be trying to get done. And the House and the Senate seem to be at least somewhat on the same page here, just trying to make sure it's truly, a program that will work. Right.
Certainly.
And I like hearing that on both sides.
For sure. Biden team sets out path for ethanol aviation fuel subsidies. This is a Reuters story. I think they were the first to report on this.
Mm-hmm. They were
the first to report on it. Biden administration on Tuesday released guidance on sustainable aviation fuel. So we're going to dig into this one. I'm going to turn the hat backwards because this one gets a little. There's a lot going on here, right?
Guidance is a pretty loose term, isn't it?
There's a lot going on here. If we're gonna dig into this, we better do it with the backwards hat. On its sustainable aviation fuel (SAF) subsidy program that allows corn-based ethanol to qualify for the program if it is sourced from farms using climate-friendly. I can't even say that with a straight face. Climate-friendly growing techniques. The plan is likely to be bittersweet for the politically powerful U.S. ethanol industry, which is eager to secure the subsidies but had hoped for a lower hurdle. Biden hopes creating a subsidized market for lower emissions SAF can counter that threat while giving a boost to farm country, an important constituency in November's presidential election. SAF can be made from corn, soy, or other agricultural products, but to access the SAF subsidies that make it economically viable to produce, refiners must demonstrate that their fuel is at least 50% lower in emissions than petroleum jet fuel. Ethanol-based SAF can meet that threshold according to the guidance only if corn farmers use a bundle of agricultural practices that include no-till, cover crops, and efficient fertilizer application that hold carbon in the soil. Recognition of so-called climate-smart agricultural practices in the subsidy program will be effective for fuels made in 2023. 2024, after which it will be adjusted or expanded, officials said. The SAF subsidies amount to $1.25 per gallon, $1.25 per gallon for fuels that hit the 50% threshold, and up to $1.75 per gallon for those that exceed it. So, a lot of talk this morning, a lot of discussion about what this really means and what we can say, and I'm not even sure how to feel about it, but you've got some stuff.
We can just start with the 40-page document the IRS released, right? And that we've been mulling over and looking at that seems to generate a lot more questions than it answers at many levels. It's great to have a model and all these things, but I also am interested where the 125 and 175 come from, because it's definitely not highlighted in here. But I'll take that at face value. If those are subsidies that you can rest your hat on, maybe there's a model here that we can start plugging and playing some numbers in and play some games. Yeah, the GREET model, okay. which that was kind of the big announcement. What climate model are they using to kind of generate these things? And then subsequently, how are they going to, throughout the supply chain, ensure that SAF production is actually being made as sustainable aviation fuel, right? And one of the guidances that they give us is that, right, only corn and beans produced under these certain metrics qualify, and that immediately opens the door to a lot of questions. I think we can shed a little bit of light here that there is kind of this hierarchy that in a supply chain that they are trying to create. It begins with the SAF producer. They're the ones who are actually sourcing, the raw potential, commodities to produce SAF fuel. they're going to be beholden to a CSA program auditor who's going to actually qualify or audit and give their rubber stamp of approval that the entire supply chain the SAF has producer has locked in contractually actually is meeting these metrics. So there is vertical integration here that they talk about. Corn and soybeans used for this do need to be contracted out ahead of time to SAF producers. The corn and soybean produced can pass through an elevator or through an intermediary, but that's also going to have to be accounted for in this contractual obligation. So these direct contracts that create a vertically integrated supply chain, we haven't had the answers of exactly how people are getting paid and how it's going to work, but we do know that they're at least setting the grounds for how to regulate it in some capacity, and that there may be third-party responsibilities here to regulate this industry to make sure that, hey, farmers that are attesting that they're doing and following these practices are in fact doing it, that the elevators involved are buying just SAF grain, and that the SAF producer is in fact beholden to the whole supply chain below them to make sure it fits the program standards.
And third parties, meaning like crop consultants,
yes,
or somehow somebody familiar with USDA programs who is now going to come into a new position and be able to come in here and quote unquote certify the sustainability or the
document doesn't speak to auditors yet for like the on-farm, right? They specifically say you have to keep documentation readily available for a third party to come and check it out effectively. But they do point out that there will be a certification auditor, a CSA certifier that will, at the level of the SAF producer, be auditing the SAF producer's supply chain.
And so to that end, that reminds us of the Zaner Farm P&L, right? Because if you are going to have a place to keep these certs for every field or whatever acreage, we may keep an eye on this space, because we may have some news about how Farm P&L, the Zaner app, can help you do that.
And for those that are not aware of what Farm P&L is, it is a on-farm tool to be used in an app or on your phone, or on your computer, to help you better track your inventory production, your on-farm decisions, your input costs. And at the end of the day, it's supposed to be like a QuickBooks for the farm, but it's taken a step further to then really be a tool for agriculture and help you track all of these things. Weather, exactly, right? There's a ton of things in there, and if you're interested in checking that out, drop us a question here, and we'd be happy to. But I believe we should have the website here to just give you guys. But check out in the comment section. We'll certainly send a link to that for anyone interested in checking that free piece of software out. In the meantime,
terrific. We managed to get through that SAF with no challenge whatsoever. There's still a lot,
still so much to be known. I mean, the moral of the story is this has shed some light on what we wanted to see, but it's certainly creating a lot more questions than answers.
We're going to come back at this, and we may have some folks to help us get more answers.
Another shameless plug is we are in the works of trying to get some other people who are way more knowledgeable on this and have actually affected policy change here on the program, and to have a talk with us about what it means for the future of this program.
And what it means for the actual producer.
Absolutely. That's the major question we really want to answer for people, but there's just not enough here for us to definitively say that, right?
That's awesome. Carter, what is your go-to karaoke song? Carter, the webcast producer, we're going to post his address so that you can all go and pay him a visit with the Pepsi cans in the sock, or the batteries in the sock. What is your go-to karaoke song? So this is a very easy answer for me. This is so simple, but please go. I mean, here you go.
My go-to karaoke song. Believe it or not, it's the Eminem chords to "Forgot About Dre."
Oh wow!
Yeah, that's
wow. That's
I mean, that is speaking to my millennial upbringing,
of course,
right? Yeah. But the Eminem chords to "Forgot About Dre," my friend and I, he'll pick up Dre's part, I pick up Eminem's. And I think we sound exactly like the track. But,
I agree. Yeah,
but I don't know.
Couldn't be any better. Easy answer for me. I have never, nor will I ever, ever sing karaoke. So I follow Anthony Bourdain's lead on that, and to my knowledge, he never did, and I never have, and as of yet, I never have, and I never will.
So the responsible decision, everybody, when it comes to karaoke, just say no.
Just say no. Absolutely.
Oh, my goodness. Well, thanks for joining us here, everybody, and for listening to the Zaner Marketcast today. If you need more because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have not already, check out our daily Ag Hedge hotline. The information is available in the comment and information section of this video. To get everyday agricultural updates from our one and only Ted Seifried, who you may not seen on RFTV or Market to Market. The best part is it's all completely free, and you can sign up for this in the links provided.
It's free.
Thank you again. And be sure to leave us a like, a comment, and follow the podcast and not miss a beat. We'll be back with you as price action develops.